This is your technical update from the LMAX Exchange Research and Analytics Desk for Tuesday, December 1st, 2015. Euro dollar. While a short-term corrective bounce in the euro should not be ruled out over the coming sessions, overall the broader downtrend remains firmly intact, with the market focused on a retest of the multi-year low from March at 104.62. At this point, any rally should be very well capped into some previous support now turn resistance in the form of that July base around the 108 area. Only back above 110, however, would really compromise the immediate bearish outlook for the euro. Sterling dollar. So cable continues to put in a series of lower tops and lower lows after putting in a fresh 2015 high at 59.30, and the market now is poised for the next major downside extension back towards the 2015 low at 145.66. At this point, any corrective gain should be very well capped, with only a break back above the 153.36 area to compromise the immediate bearish outlook. Dollar yen. So dollar yen continues to chop around with the market confined to a tight consolidation between 122.20 and 123.75. It's going to take a break on either end for clear directional insight, with a break back above 123.75 to open the door for a full retracement back towards the multi-year 2015 high at 125.85, while a break back below 122.20 would expose fresh weakness down towards the 120 area. Again, at this point, it's a bit of a wait and see as the market remains confined to some consolidation within those ranges. Euro Swiss. So Euro Swiss has been chopping around with the market largely confined to a multi-week, multi-month consolidation. At this point, though, the recovery outlook remains intact, with the market being very well supported above 107 and a fresh upside extension seen back towards 110.50 and eventually exposing the 112 area further up. At this point, only back below 107.14 would compromise the constructive outlook for Euro Swiss. Aussie dollar. So although we've seen some gains in recent trade in the Australian dollar, the market is expected to be very well capped into rallies, with the broader downtrend firmly intact, and the market expected to hold below a recent lower top at 73.82. At this point, only back above 73.82 would compromise the immediate bearish outlook, with the lower top now sought out in favor of the next downside extension back towards and eventually below the recent multi-year low, just ahead of 69. Dollar CAD. So dollar CAD has been consolidating in recent trade, but the overall structure remains highly constructive, and any setbacks here should be very well supported initially around the 130 area in favor of the next major upside extension beyond the September 11-year high at 134.57 and towards 140 further up. At this point, ultimately, only back below some previous resistance, now turned support in the 128 area, would compromise the highly constructive outlook for dollar CAD. Kiwi dollar. So we've seen a bit of a bounce in Kiwi in recent trade, but again, this market remains confined, just like the Australian dollar, to a longer-term downtrend with a medium-term lower top sought out ahead of the next major downside extension. The medium-term lower top here is around the 69 area, and only a break back above this level would compromise the bearish outlook. At this point, look for some form of a lower top to now carve out somewhere around the 68 area, or ahead of 68 ideally, in favor of that next downside extension below recent lows that we saw at 64.28 and towards those multi-year lows that we saw earlier this year down in the 62 area. SPX 500. So the S&P 500 is confined to consolidation over the past several sessions, and the market will now be focused on whether it can break above 2117, that November high, or back below 2003, that low that we saw back on the 16th of November. At this point, a break above 2117 would expose a retest of the record high from May at 2137, while back below 2003 would suggest that the market is putting in a more significant top and accelerate declines. Initial support for this market comes in by 2068. That's the low going back to the 24th of November. Gold. So although gold has seen a breakdown to fresh multi-year lows down towards and just shy of 1050 thus far, the market is oversold and is now showing a bit of a potential for a short-term correction. At this point, the short-term correction could develop into something more significant should the market take out key resistance in the 1100 area. But inability to do so will keep the more immediate pressure on the downside, with the market seen breaking back towards 1000 if it can establish below 1050. Right now, key levels to watch above and below, therefore, come in at 1100 above and 1050 below. A break on either end will help define the next directional insight for this market.